Good afternoon, and thank you so much for joining Madison Trust and ZT Corporates. Again, my name is Nicole. I am one of the senior strategic executives here at Madison Trust. I am joined by two lovely gentlemen over at ZT. How are you guys today?
Doing wonderful. Thank you, Nicole and Alberto and the Madison team for having us.
Yeah, thank you
Awesome.
very much. We're excited to chat with the folks with Madison, but also all of the guests that have joined us today.
Absolutely. We're so excited to have you here to talk a little bit about strategies, insights about the current market, and discuss ZT Corporate and how you are handling it all and propelling towards the future. So thank you so much. But we'll get right into it. So ZT Corporate has built a reputation around its owner operator approach, which is something that does really stand out in today's investment market. How does your owner operator model tend to be different from a more traditional private equity approach? And why might that matter for long-term investing?
Yeah. Kevin, you want to start?
Yeah, definitely. So, you know, ZT Corporate, we've been around for close to 30 years. We're entering our 30th year of business here shortly. And we started off as a small wealth management group, and we had our first investment into a healthcare platform in 2003. And what was unique about that is we partnered with some doctors and created a surgery center, imaging center, and a sleep center. This is in 2003. And we partnered with the doctors because these doctors were phenomenal at giving service and taking care of patients. And we wanted them to focus on being great doctors. And Tasir, our CEO, and his team, we put together from an operating standpoint, we've wanted to focus on the business. So that marriage happened really well, right? We focused on operating the business day to day. And we kept that same philosophy through all the different modalities that we soon then entered, like hospices, dental clinics, infusion labs, pharmaceuticals, toxicologies. We've gotten to all these other healthcare modalities. And with every single one of those partnerships, we brought on investors into these. We brought on partners that were actively working in these businesses, but we were the ones that were operating. So that means day-to-day business operations, accounting, financing, paying out the bills day to day, all of that stuff. We truly pride ourselves as merchant class businessmen and women and take a small business approach to these larger platforms. And then shortly thereafter, we got into the automotive space. But I think what really sets us apart from traditional investment platforms, whether that's real estate or other private investment groups, is that money that you may invest or others that you invest with, they may not have a grip on the actual business. They will just deploy that capital and a third-party management team will run it, right? Whereas we have our thumb on the business, and that allows us to really control how that business is. We're seeing trends in the markets, COVID, or how policy changes in healthcare, or in the automotive side, we see a shift in consumer behavior. How can we adapt to that? What different strategies we can implement without having to, and we can make those changes immediately and see the benefits to our business. And Azra, I'll let you add anything to that.
Yeah, it's very common for traditional private equity to just deploy capital, but then just sit on board seats and really control it from a financial standpoint, but really not an operational standpoint. It's totally different from being in the business, rather than just working on the business. So we do a combination of both. So having our own operators, and also, our philosophy is when we even buy businesses, we're not a turnaround company. We're buying businesses that are already doing well, and they're good businesses. We're just making them great, So, and we don't really put 100% of our own philosophies in there. We listen to the people whenever we acquire these businesses to see in different markets, things are different. So in a New York market, you operate completely different than in a Texas market or the California market or the Florida market. So it's just us being on the ground in the business makes a huge difference.
Mm-hmm. Absolutely. And speaking of listening to investors, one thing that we're always seeing at Madison Trust is definitely investors looking to diversify beyond just traditional market investments and explore alternative investments. Why do you think that some investors would consider owning everyday businesses like healthcare businesses or auto dealerships?
Yeah, it's a great question. So, number one, there's obviously many, many options to invest, right? You could go to the stock market and invest, but you're already paying a huge premium. If you really look at price to earnings ratios, these businesses that you may think that you're owning just a stock, but you're technically a partner in that business. But you're owning that business at 20 times its earnings, 25 times its earnings. And in certain cases, a lot of these tech stocks, there are no earnings and you're just speculating that one day it'll become profitable or so you're paying way much even more than the revenue of the business.
Mhm.
And with private investing, that typically private projects, you're paying 5, 6 times earnings, so you're getting it at a much more discounted level. That's number one. Number two is you can actually drive down to the business that you've invested in. So,
Right.
having a private business is a huge advantage, or investing in private businesses is a huge advantage compared to doing it in the market, all in all.
Yeah, and
And
to
would you
that
like to add?
yeah, to that extent, Azhar had mentioned these are public companies versus private investments. I always tell folks you can invest in the Ford stock, but being able to
Right.
own the Ford dealership down the street is really unique. And that's what I look for, and that's what we look for as a firm. Quality businesses. We're not turning anything around, but
Mhm.
the industries that we represent, and that we have exceptional expertise on the healthcare side, 25 years of owner operating experience, and on the automotive side, close to a dozen years, just shy of 12 years, here coming soon, of auto experience. Um, we rather play in the lanes that we know, and go 100 times harder into those two. We say we
Mhm.
focus a mile deep in two lanes than being a mile wide in 10 different verticals. And as investors, I always encourage people to invest in what and that's why so many of us gravitate to real estate. We know real estate, whether it's commercial or residential. But we have to diversify too, right? Diversification allows us to hedge when we do see some volatility in the markets, in the public markets or in the real estate markets. And at the end of the day, we want to be, as a firm, we've looked at businesses that are cornerstones within the American economy. We
Mhm.
know that the healthcare segment is ever growing. We want to be able to provide our communities in Texas, where we represent 31 freestanding emergencies today. We're the largest private emergency room company in the state of Texas. And the communities that we serve, that's one of the biggest value drivers is being able to give quality care to smaller rural markets that don't have access to. In Houston, we have the biggest healthcare capital with Texas
Right.
Children's and Methodist and such great platforms. But someone that's down in Lake Jackson is an hour and a half away or 2 hours away. They don't have that access when they're in an emergency. And so being able to invest in those businesses that are needed by local communities. But on the flip side, on the automotive side, we love our cars. Americans, it's an industry that traditionally has been owned by families for generations, right? Nicole, you probably have noticed that that dealership in your neck of the woods has been owned by the same family, probably has that family name uh,
Yep.
for generations. And what we're really seeing is a consolidation in the market where families have been operating these businesses for decades. For example, I'm working on an acquisition with a team right now. It's been owned by a family for 50 plus years. And unfortunately, their kids don't want to run it anymore, right? Their
Mhm.
kids don't want to be a part of the business. And so we step in, and having that diversification of being into businesses that have incredible track records that are staples within the communities, whether that's
Mhm.
on the healthcare side or the automotive side, or it could be any business really. But investing into the markets that we know allows us to be insulated from some of those market volatilities on the public side because we've seen how much the market has expanded over the last 12 years, really since 2010, 2011. The market has been on a tear, and we're just waiting, not if it's going to happen, but when something will really take a hit in the market. And so insulating by being in both private equity or private investments, I'm sorry, and on the public side.
Yeah. And Nicole, you will be surprised that, we own 16 dealerships, right? So when I say
Right.
we, us and investors, aligned, um, there's so many cars that our investors purchase. Out of the
Mhm.
16 dealerships, there's a brand that they need, and we're able to have them, buy a car from something that they're invested in. It's a great feeling. We get so many investors say that,
Mhm.
hey, I just got delivery of my car. Thank you so much. The service was exemplary. So,
Oh,
it could be a Mercedes, it can be a Toyota, Honda. I mean, or American brands, Ford, Chevy. I mean, a
right.
lot of our investors purchase cars from something that they're invested in. So it's a great feeling to know that.
Right, right. And of course, service is the top priority. You can definitely tell that in the way that ZT is structured. I do have some questions related to like the healthcare and auto service businesses. What do you think are some specific traits that you see that work well for long-term retirement capital investing?
So the way we've structured everything, in terms of our investments, we have options for investors that, what, some investors are like, hey, I want to take more risk.
Right.
Or there are other investors that are like, what, I want to go to bed at night knowing consistently my portfolio is doing well. I don't want to take as much risk. And I'm looking for income. So we have options for both. So we're always trying to mitigate risk, but the way we have structured a lot of our investments is investors, in some of our investments, investors are sitting above even the common shareholders. So they're after the bank gets paid, they're next in line to make sure that the capital gets paid to them before the management team and the common shares, they get their money. So it is very insulated in terms of risk. So it's great for retirement planning. So, we get ton of clients that are like, what, I don't want to take risk. I'm at an age or I'm trying to, especially with their retirement funds, no one wants to take, risk with that. So
Course.
this is where we step in and we're able to have that conversation with them and make sure that, we talk about it and then the investment that is issued through the issuer with us, if they feel that this investment is right for them, then they go forward with it. Kevin?
Yeah, yeah, definitely. And between these two industries that we focus on, um, why we got into them is because the consistency of revenues, but that is really driven through the customer service, as had mentioned. We pride ourselves in delivering to these communities great customer service. That's why both of these businesses are truly driven. They're retail businesses, right? People aren't going to buy a car. You can buy a Toyota from any dealership. Really, you can buy them online. They can be delivered right to your front door. It's all about the experience for both the customer and the quality of service that we drive. And on the healthcare side, if you have a bad experience at an emergency room, you're not only gonna not go there again, but you're gonna tell
Uh,
10 other people that why you had
right.
a bad experience.
Absolutely.
At a traditional hospital, a patient will wait 3 to 4 hours to see a doctor if you're in an emergency, if it's not a cardiac related issue. At our
Mhm.
emergency rooms, a patient is seeing a doctor in less than 10 minutes.
Mhm.
Okay. And they're sitting by that patient and going that inpatient is going to be done traditionally within 45 minutes of visiting that ER. But it's all about quality of care. And what we've seen over the years in both of these businesses, we've served over 1.5 million patients throughout Texas. And we have built that on a good reputation. And what that has allowed is to create a portfolio that has been resilient for the investors that have partaked in it. But while participating in some of these the healthcare needs of those local communities. And then on the automotive side, it's really a staple within the industry. Um, cars cars are going to be always in demand, whether you're buying new or used. But it's many times people don't realize that dealerships make money multitude of ways, not just by selling cars brand new or used, but um, by selling, warranties and financing, and most importantly, service and parts. That generates generally roughly about 45 to 50% of all dealership platforms recurring revenue. So it's all about quality of service, customer service, retention, and making sure that those people are coming back through our doors. And year over year, we've been able to grow the portfolio. But these are two just industries that have significantly shown resilience despite, for example, the pandemic came around,
Right.
and what are the two industries that really exploded were, our personal vehicles,
Mhm.
just driving to work on their own. In Texas, we really don't rely on public transportation, but the car market really exploded, had one of the best years on record. And on the
Yeah.
healthcare side, we saw what the smaller market facilities were able to do while our hospital systems were really overburdened. And since
Right.
the hospitals really lean on us, helping, asking us to take off a load so that we can take some of those lower acuity items and so those patients aren't taking the beds that are needed for higher acuity patients.
Mhm.
So, think both of these industries, what we have experience in, um, provide great value for folks that are looking for something on a diversified basis.
Mhm. Awesome. Awesome. I do want to just go into our disclaimer in case any of my attorneys are listening. We are a passive custodian and we always encourage clients to do their due diligence on the assets they choose to place. I know Azar was briefly speaking about risk, so we do want to make sure that clients are doing their due diligence. However, I always think it's always valuable for investors to understand how experienced operators evaluate their opportunities behind the scenes before moving forward with any acquisition or investment. So Azar, if you want to take this one, when you look at a new healthcare or auto potential opportunity, what are the first two or three metrics or signals that you and the team at ZT really focus on to deeper due diligence?
Yeah, certain things, we're not a turnaround company, so we were looking already for good businesses that are run well, and we're looking for certain things that we look for is an absentee owner that has given the operator, basically total freedom to do what they need to do in the business. So, we like those kind of businesses. Um, when you have an absentee owner, and then when an active management gets in, you could boost that business right away. So that is one of the things we look for folks that are retiring, that their kids are not interested, or they don't have any heirs to pass on the business to. That's another thing. And we're looking for more tertiary markets, even though we're in metropolitan, markets as well. But we generally like having businesses in tertiary markets because it builds a moat around you, where either it be in healthcare or in automotive dealerships that that local market will only be able to purchase from you. So it creates a kind of mini monopoly in that area. Um, Another thing is, we do all our due diligence is done through not only us and our fantastic team that we have for M&A team, but also third party as well. So we get really high quality third party companies to do the quality of earnings because sometimes even the owners of that business get shocked when we show them the numbers when we're doing our due diligence. They may be thinking they're making $30 million, but in reality they're probably only making $20 million. So um, you know, key metrics is we want to make sure their reviews are great. They're already providing a great service because one thing to change in a business, you could change things from a financial standpoint, operation standpoint, put your operations in, but you really cannot change culture overnight. You just can't.
Right.
So we're always looking for businesses that already have a really good culture in place and the people are happy. And
Mhm.
our job is to make sure we reassure them once we're acquiring the business that, hey, if you're, you're a culture person and you're doing a great job already, we don't want to come in and change that culture up. Like Kevin was actually telling me in one of our recent acquisitions that we made last year in October,
Mhm.
of how they don't let any of the customers in the dealership touch the doors, where every
Wow.
door is open for you. And if you're asked for a restroom, they walk you to the restroom. Like the service is exemplary. And Kevin, you want to get into that? I know
Yeah,
you had a
definitely.
very good experience with that. And then anything you would like to add what I just said?
Yeah, definitely. These are little things that whether it's an auto manufacturer or a dealership does. The story was we purchased four dealerships in Tampa, and this platform had been owned by a family, and we went and visited, and we noticed at first when we walked in, someone opened the door. We thought, okay, well maybe they just know us because we're the buyers. But we noticed that every single door was open for every customer that walked in, even the bathroom doors. And it's a policy that has stuck around from the original owner was a customer will never touch the door. And it's that small little detail is something that we've now carried over into our entire platform. So
Hmm.
all the dealerships now, no one's touching a single door. And from on the healthcare side, with our emergency rooms, anything like culturally that we see or the staff, anytime we're going through an acquisition, we generally don't shake the entire system. We bought it because it was successful, and it was successful for a reason. And it's because of the people there that are working there. We're not a team that's going to go in and clean up the entire house. We generally keep almost all the staff there, and whether that's on the healthcare side or in the automotive side. And from the due diligence that Uzzer was mentioning, we looked at over 200 deals last year, 200 different projects, whether that was healthcare or whether that was automotive. And we only ended up going through with two of them. And I think as investors, we have to take that same approach because there's so many different types of investments that come across our desk, right? We see so many
Hmm.
different investments. Hey, you can do this deal or this storage facility or this, whatever it may be, a crypto. And we get so many different projects, and we have to be very diligent as investors, um, as a firm, because we're stewards of our investors' money, but our number one investor is our banks. Our deal sizes generally range anywhere from 100 to $250 million
Hmm.
from an acquisition base. The current project that we're looking at is a $200 million acquisition. So we're not putting together 5 million or 2 million or $10 million for an acquisition from our investors. We're pulling together 60 to $100 million just for one singular acquisition. And so that load of responsibility that comes with that requires heavy amounts of due diligence, and discipline before entering a project. Many folks will say, well, you only have one deal a year, but it's because of the discipline that has to be put in place that allows us to really be consistent, with not from a yield perspective, but from just a consistency of providing quality results, the
Hmm.
business performance, and steady growth. Because when we started off, we were a bootstrap company where gunslingers, I'd like to say, because we would do the development, we'd go out to a market and we would build a hospice, or we'd build that hospital, or we build that surgery center. We build it in these smaller markets. And then about 12 years ago, we fundamentally shift into just acquiring businesses, as we've mentioned. And so now we're looking for quality businesses that have legs, that can be really brought into our system, and scaled within our system so we can benefit from things like supply chain. We have larger supply chain orders, fixed ops reduction, right? So now we have an HR team that can manage the entire platform, not just one dealership platform. So
Right.
we're able to reduce a lot of the fixed costs just through economies of scale, and I think that's where a lot of our value comes through, not just through our acquisitions, but reduction of all of these other items that ultimately is where we drive that value for the investors.
Yeah. So some good diversification there amongst different assets. That's
Yeah.
fantastic. One area investors really appreciate in private investments is transparency, of course, and good communication. I love that no one touches the door service. Maybe I can start instilling that in my fiance to do that in our home. But what does investor communication look like to you in a ZT deal? Like, how often do how often do they hear from you? And what kind of information do you provide after?
Absolutely. So, depending on the project, there's certain projects that there's really no updates you can really give because we're doing the same old thing. But investors do get each time there is a distribution that goes out, there's an email from the portal that goes out and exactly what they're getting. So the cadence is once a month. If the dividend is on a monthly basis, they get it monthly, and then if it's on a quarterly basis it's quarterly. But when it comes to the communication of the operations and things like that, internally, our leaders do meet once a month. It's called the monthly operating reporting meeting. In fact, we just had that on Sunday, so 2 days ago. Um, so, um, and the reports are a thick booklet that we go through, and we do it for each business, the healthcare vertical and the automotive vertical. So once we go over all the numbers, we basically give it to our investor relations team, who goes and the investor relations team does participate in those meetings. And it's a very raw meeting, very transparent. We get to know all the numbers throughout the business, and then they create a investor relations piece out of it. In certain businesses, it's numbers driven, certain businesses, it's service driven. And we communicate that to our investors on a consistent basis. So depending on the business, it could be monthly, quarterly, or yearly. So, but
And
investors
also,
do get consistent communication around it.
yeah,
Plus, every investment, that someone does, there's a relationship manager that the investors are working with. So there's always regular communication that's going on. So they're not calling a 1-800 number or the front desk. Everyone has the investors that we work with, we have a personal relationship with as well. Go ahead, Kevin.
yeah, exactly. That's what I was going to mention is uh, investing is really a personal relationship. People put trust behind a company. They're putting, whether that's retirement funds or personal cash, whatever that is, behind a company. Our doors are always open. We frequently have people come visit not only our office, but even ask them to visit the business, not as a patient. Hopefully, they don't have to visit as a patient.
Yes.
Uh, you know, um, but always encouraging them to check out their investments as well. But from a cadence, we pride ourselves in direct communication with the relationship manager, and we have direct access, obviously, to the operators of the business. We've had times where people want to spend time with the president of our automotive dealership, so we will all spend time and we'll set up a meeting so they can get a deeper understanding of how how the automotive business is doing, or answer any questions that they may have. We're really transparent, from top down, from operations to business performance to investment performance. Even when it comes to the K1 time or taxes, we will provide that through our portal. And more importantly, we provide the audited financials. We are an audited firm. We'll make sure that these audited financials of the investment are shared with our investors on a yearly basis. So they go out once the audit has been complete by a third party. We'll go ahead and we'll prepare it and we'll send it out so investors see under what all the numbers are of that specific business. And I think that's important because transparency is the most important thing, right?
Yeah.
Because sometimes business goes up, business goes down. There's only so much control that we have. Even as operators, we try to have as much control as possible, but you can't control everything. But I think the most important thing that investors want, because I myself am an investor, Azur is an investor, I'm sure you are too, Nicole, is, hey, if there are some headwinds, what are they? Just let us know, and keep in communication, because the last thing you want is where you've placed money and you're not hearing from them. It's a ghost.
Yes.
That doesn't make you feel good.
Absolutely. Well, this has been a very insightful conversation into both the healthcare and automotive sectors. For anyone who is listening and is interested in learning more about your strategy, how do investors get in touch with you?
Yeah, I have a let's see, I put a just an information sheet. Maybe see if I can pull it up here and I can share it. It'll just have my contact information here. And let me see 1 second. Do you mind if I share my screen?
Go right ahead.
All right, let's do it. Here we go. Can y'all see that?
Yeah, perfect.
Okay, perfect.
Well,
So
we can leave that up there too. I know we're nearing about our 30-minute mark here.
sure.
Any further questions you guys or clarity you want to wrap up with before we get into some questions?
I'd like to just mention that, when it comes to ZT Corporate, as a firm that's been in operations for close to 30 years, um, we are a relationship-driven company. We pride ourselves in long-term relationships. We're not just for one specific investment, but it's also to provide people the opportunity in markets that they traditionally won't get an opportunity in. Unless you're a physician of some sort, do you get an opportunity to own healthcare facilities? Or unless you're a family that's been owning dealerships, besides buying a stock in Ford or Volkswagen, you can't really buy those dealerships or be a partner in these businesses. And there's a reason why both of these industries have done extremely well. And for those that are looking for just to learn more about these industries, I encourage you to just take my name or my number and or my email and others as well. I pride myself on being the auto expert. I know I can talk auto all day and every day. Uzzer is our in-house healthcare expert. And so, but either business, if you guys have more questions, would love to chat. And I'll welcome any additional questions now. And Uzzer, if you want to tie anything else into it.
Yeah, like Kevin said, very relationship driven. We have a long track record, been in business for almost 30 years. And Kevin and I have been in this business 19 years for me. And for you, Kevin, I know it's 15 plus years.
15 years.
Yeah. So, when investors work with us, they're working with someone that's been been at ZT Corporate for a very long time. So can really explain the history and our culture and what we're about. And the best thing is we can maneuver around the company very easily. Currently, currently we have over 2,500 employees, throughout the company. We're in multiple states. As I'm sitting here in California and Kevin's in Houston, so multiple states, and also our businesses are spread out all across America as well. Um, when investors work with us, we can go into a lot of detail about the intricacies of the business. We just want to thank you guys. Thank you guys for bringing us on. And I know we were trying to get a time together, so I'm glad this worked out, for the scheduled time. So thank you guys for that.
Yeah. Thank you to all the attendees and thank you, Nicole. Thank you, Alberto, for setting this up. I have put up, our contact information. Again, you guys anyone that may be interested in learning more about ZT Corporate, visiting one of our facilities or coming by our office, you can always just give me a ring or shoot me a text, and we'd love to have you come by. And if you're somewhere in California and Newport or LA, you can visit our office in LA as well. So
Also New York, because I know Madison's based off of New York, right? So we have a New York office as well.
I'm down, of course. Azar and Kevin, thank you so much for jumping on this webinar today. Super excited to continue working with your team, your company. You guys are great over there at ZT. And thank you all for joining us today. I will catch you on the next one.